Hello and welcome back. In this lesson we will continue with capital gains tax. As we will try to finish in this lecture, this is our last lecture of capital gains tax. So hopefully we'll finish capital gains tax in this lecture. Alright, so there are a couple of reliefs left in capital gains tax. So we have seen entrepreneurs relief, we have seen some deferral reliefs as well, including rollover relief and some of the held over relief. And now we will see a couple of more reliefs which are part of ACCA P6 exam. So which are also they are relief, so they will defer the relief, so you won't have to pay tax now, but you might have to pay tax in the future. Right, so without wasting the time, let's move to our lecture notes. That's where we will find our our notes. So if you could please move to page 51 of the lecture notes. I've already shared the screen with you. It says Enterprise Investment Scheme Deferral Relief. Now you have, if you remember, we have studied three types of schemes, which are EIS, SEIS and VCT. Now in all of them schemes, there was small portion in at the end of the each scheme. There was small portion, which I told you that we are not covering it yet, but when we will study capital gains tax, then we will cover that. Right? Now this is the relief, which is enterprise investment relief. Now after reading this relief, then you can go back to EIS, which is chapter 1, I think. Go back to chapter 1, then you can study that portion as well of EIS. A little portion was left where it says EIS relief on capital gains, so you can study that as well after completing this one. Alright, now it says that an individual may defer a gain arising on any type of asset if he invests in EIS shares. Now it says if he invests in, please make sure you write it down at if he reinvests in. So say for example, if you sold an asset, it says it could be of any type of asset. So if you sold an asset and you had some gain on that, now that gain can be deferred if you invest the whole amount in enterprise investment scheme shares. Now EIS shares, you know that EIS shares are some specific shares. So EIS companies, there are some conditions to be fulfilled to be a EIS company. So you are going to invest in EIS company, so you are going to buy some shares in EIS company. So if you reinvest that amount which you have after selling an asset, so gain on that will be deferred. So an individual may defer a gain arising on any type of asset if he invests in EIS shares. Now the amount of gain that can be deferred will be lower of these three. Now the amount which can be deferred will be lower of these three. What is the lower of? First one is gain on the asset. So whatever the gain is, that will be. So you sold an asset, you deducted the cost, whatever is the net amount, it will be gain. So it will be either the gain on the asset. The second one is amount subscribed in EIS. So whatever your amount you subscribed in EIS shares, so either that one, and the last amount is amount specified by the investor in his claim. Now you can say to HMRC that I want that much amount. So if it is up to you, it's so obvious. If HMRC asks you that how much relief you want, you will say I want £1 million of relief. No one says I just want £1 relief. So everybody, if it is up to you, if HMRC asks you, if HMRC becomes that much generous to ask you that how much relief you want, so everybody gonna say I want £1 million of relief, or I want 100,000 of relief. So if in this case, in the third one, which is C, amount specified by investor in his claim, so you will write down that how much relief you want. So if it was me, I would write it down as £1 million. But can you see that it is not higher of these three, it is lower of these three. So even if you have stated that I want £1 million, so it is not higher of these three anyway. So HMRC is going to pick up the lowest of these three. So whichever amount you state, it doesn't matter. So the last one is how much you want. You can say how much claim you want, and the other two are gain on the asset, and the B is amount subscribed in EIS shares. So if you could practically see, if you think about it practically, C is irrelevant, because in the C you are saying how much relief you want. So everybody, it is very obvious, everybody would want as much relief as they want, as much relief as possible. So C is irrelevant, and A and B are relevant. So it will be lower of gain of the asset, gain on the asset. Sorry, it says gain of the asset. So so whatever gain you have on the asset, or the amount subscribed in EIS shares, right? And after that, it says EIS deferral relief should be claimed. So you have to make the claim within 4 years after the end of tax year when the gain to be deferred arose. So within 4 years, it means if the tax year is 15-16, it says for disposals in 14-15. It's not 14-15, it's 15-16. So if disposal in 15-16, then it must be done by 5th of April 2015. Alright? Then after that, it says the deferral gain will come into charge on either of the 3 following events. Now that gain that was deferred, the gain which will be deferred, will be chargeable on either of these 3 events. A chargeable disposal of EIS shares. Now if you dispose the shares which you bought in EIS company, if you dispose of them shares, and if they are chargeable, then that gain which was deferred will also be chargeable. And the second one is the investor become non-resident. Now the investor, if whoever has bought the shares, assuming that he was resident, and if he ceased to be UK resident, then also it will become chargeable. And the C is that shares ceasing to be eligible shares for EIS company. So say for example, if the company was EIS company initially, but is no longer a EIS company, then in this case as well, that the gain will become chargeable. All right. Now this was the relief, which is Enterprise Investment Scheme Relief or EIS relief. Now after reading that, could you please go back to EIS scheme, which is chapter 1, and read the EIS relief as well, so that you can understand this thing better. So please go back to EIS, which is chapter 1, and read that. I assume that you have already done it. Now let's continue with our capital gains tax. Now I'm on page 52. It says Incorporation Relief. Now Incorporation Relief is simply that I was doing a business and I was sole trader in the business. I was doing quite alright. Then I thought, why don't I sell this business to a company? So if I want to sell this business to a company, or if I want to make this business a company, in both cases it will be as incorporation relief. All right. Now, when I am incorporating this business, when I am selling this business to a company, then I hope that you would appreciate the fact that I am selling this business to a company. So when I sell this business to a company, then I will have some gain as well. Now that gain can be, that gain can be deferred if if certain conditions are met. All right. Now that is called incorporation relief. Now let's move to our notes and let's start reading from the notes. Now it says incorporation relief when the business is sold to a company. Incorporation relief is automatic, so no claim need to be made. It is automatic. However, an individual can elect not to receive incorporation relief by 31st January, which is approximately 34 months after the end of tax year. Now it is automatic. You don't have to make any claim. So it is absolutely automatic. So it is not like gift relief where you have to make a claim. So it is automatic relief. However, if you don't want this relief, if you can say to HMRC that I don't want this relief, then you can do so by 31st January. Alright? Now, could you think of any reason that someone would not want this relief? I mean, if we talk about the general reliefs, everybody wants the relief. Now, who would be someone who don't want this relief? Could you think of any reason? Yeah, there is one reason. If you think about that, this relief which we are getting, this is just deferring our gain. It is not. We are not avoiding this gain. At future point, sometime in future, we will have to pay it eventually anyway. So there are some people who are who think that instead of paying later, it's better to pay it now. So if you are of a kind of that person, if you are that kind of person, then you can say, I don't want this relief, I want to pay it now. All right. So HMRC says that that's fine. So, but you will have to tell HMRC by 31st January, which is approximately 34 months after the end of tax year. Now, how does it work? It says that when you sell an old asset, when you're selling the sole trade business, what you have to do is you have to take the sales. So when you take the sales, you will take both the cash and the shares in the business. All right. Now you will sell the cash and the shares, and you will deduct it says cost. It's not cost, it is cash. So when you sell, you will take both cash and the shares, and you will deduct the cost out of it. That will be our gain. Now, out of that gain, you can deduct the incorporation relief. How can you do that? You will take the gain. Now that is X in our case, both two X's. So you'll take the gain multiplied by shares over cash plus shares. All right. Now, so you can. I hope you can understand that a gain is only available on the shares. It is not available on the cash. So you will take the gain multiplied by shares over cash plus shares. Now that would be our incorporation relief, and after deducting that, the net amount will be chargeable to capital gains tax. All right. Now what would happen after that? Now if you bought some shares in the new company after selling this one, so what would happen about them shares when you sell them? When you sell them shares, we take the sales and we calculate the base cost. And when we calculate the base cost, we take the cost of that, take the cost of the shares, and we deduct the incorporation relief, and whatever the remaining one is, that would be our cost. And when we deduct the cost out of the sales, that would be our gain. All right, that's how the incorporation relief works. Now after that, it's held over relief on destroyed assets. We've already covered this one in the previous lecture, if you remember. Now if you could come to the next page, which is page 53, it says disincorporation relief. Now disincorporation relief is exactly opposite like incorporation relief. In incorporation relief, what did I say? I said that I had a business and I want to sell it to a company. So if I had a sole trade business, or if I had a company, I am selling my company or my business to another company. Whereas in this one, if you can see, it is disincorporation. Now what does incorporation means exactly? Incorporation means you are incorporating business as a company. You are making the company in incorporation. However, disincorporation is exactly opposite to incorporation. So you had a company, but you don't want to keep it as a company, and you want to sell this business and keep trading as a sole trader. So that's what it is called, disincorporation. So you are selling the company and you are trying to operate this business as a sole trader. So it says disincorporation relief applies when the shareholder decides that the company business to be run as a sole proprietorship or partnership. Normally, if we ignore the disincorporation relief, if we just ignore this relief, what would happen is that we will sell the company shares to the shareholders, and then we will calculate the gain. So that's what it says. Normally, if the company is disincorporated, then for CGT purposes, all the assets are sold to its shareholders at their market value. Now, if the company is disincorporated, ignoring this disincorporation relief, what will happen is we will take the assets of the company and we will sell them at the market price to the shareholders, and which would result in capital gain, which would be chargeable to corporation tax because it is a company. This capital gains tax can be avoided. So this can be avoided. How can we avoid it? If disincorporation relief is claimed, disincorporation relief can only be applied if all of the following conditions applied. What are the conditions? The business which we are going to seize, the company which we are going to seize, although we are seizing the company, but the business is transferred as a going concern. So it will continue operating the business. Although we are selling it, but this business will continue operating. So it will be a going concern. All the business assets except cash are transferred. It is not cost, again, it is cash. So all of the business assets will be transferred except cash. So that is another condition. Condition number C says the total market value of the land and building and goodwill is £100,000 or less at the time of transfer. And the next one says all the shareholders to whom the business is transferred must have had their shares in the company for at least 12 months prior to the date of transfer. So all of the shareholders must have held the shares for 12 months prior to the date of transfer. And the last one says this incorporation relief will occur between 1st of April 2013 to 31st March 2018. Now the last condition is just an information. It is just informative. It is not as important as the previous four are. So please make sure you memorize all of them, because it is very, very important as far as exam is concerned. Now, if you could see here, it is important. You can only see the theory here. Now, can the examiner expect us to do some calculation on this one as well? Yeah, you are right. Examiner may ask you to do some calculations on this incorporation relief. However, he may ask you to do theory as well, because as far as calculations was concerned, they were already examined in F6. So examiner says that they were already examined, so I don't need to examine it again. So the chances are he will expect to do commentary more than the calculations. But you must not ignore the calculations. They are equally important as theories. Alright? Now these are end of our reliefs. Now if we just see the badges of trade, the next one is the badges of trade. Now what is the badges of trade? Now ignore the notes, ignore the screen, just look at me. Now at this level we have almost completed two sections of our advanced taxation. Which are two sections? One is income tax, another one is capital gains tax. Now assume, I hope that you would appreciate the fact that in income tax we pay tax on our income. Income could be of our salary or our business. Now if we are doing a business, then we will have to pay income tax. Now what was the capital gains tax? Capital gains tax is not the tax which I pay on the business, whereas it is a tax which I pay on my assets when I sell them. So when I sell an asset, I will have to pay capital gains tax. But when I am doing trade, when I'm doing my business or trade, that would be my income tax. Now, having said that, could you please tell me that if I am selling an asset, will I have to pay capital gains tax every time? Say for example, if I sell this iPad, will I have to pay capital gains tax or income tax? I think we will have to pay capital gains tax, because this is a capital asset which I am selling. Now assuming, ignore this thing that I am selling this iPad. Now come to another story. Say for example, if I work for Apple and I am managing director of Apple, and I sell different sort of iPads and different mobile phones. Now if I have a shop of Apple, if I have a franchise, or if I have a private shop where I sell different iPads on a daily basis, then if you think about it, it is my business, isn't it? Because I am selling I'm selling iPads on a daily basis. Now, in the first story, I told you that I sell my iPad, and in the second story, I'm selling my iPad. So what's the difference between these? Now, when the things are that much complicated, then the badges of trade help us to understand whether it is a trade or it is a capital asset, sale of capital assets. So after differentiating that, then we will determine whether we have to pay capital gains tax or we have to pay income tax. Now this understanding is very, very important, because otherwise we will not be able to determine whether we have to pay capital tax or whether we have to pay income tax. So that's why the badges of trade are there to help us in order to differentiate whether we have to pay capital gains tax or income tax. It will depend on if we are doing the business, then it will be income tax. If we are not doing the business, then that will be capital gains tax. Now the badges of trade says that if the sale is to be distinguished, that whether it is a trading transaction to be treated in income tax or it is an asset disposed which should be treated in capital gains tax, then the following factors should be considered. Now the first one says subject matter. Whether a person is trading or not may be decided on subject matter of the transaction. Some assets are held as an investment for their intrinsic value, like painting. So for example, I had a painting and I kept it for quite long, and after that I am selling it. So that would be my capital asset and I will have to pay capital gains tax. But it says the subject matter may be that cannot be held as an investment. Instead, it is a trading transaction. Now say for example 3.4 million, or sorry, 34 million yards of aircraft linen, or 1 million of 1 million toilet rolls, so toilet paper rolls. So if you are doing that much transaction, the quantity is that much, then obviously you would appreciate the fact that no one needs 1 million rolls of toilet paper for their own use. Obviously their intention is to do the trade. Alright? And the second one, it says frequency of transaction. How frequently are you doing the transaction? Like I gave you the example of my iPad. If I sell this one single iPad, that would be my capital asset and that would be capital gains tax. If I am doing it frequently, very frequently, if I have a shop and I'm selling tens of iPads a day, then that frequency is too much, so that would indicate my trading. So that's what it says in this one. If the frequency is too much, you are selling, you're doing the similar transaction very frequently, then that will indicate that I am trading, so I will have to pay income tax. After says length of ownership. Now if I have held this iPad, I am owner of this iPad for 2 years. If I am owner of this iPad for 2 years, it is an indication of this being as capital asset. Now if I buy this iPad yesterday, if I bought this yesterday and I am going to sell it today, then more likely it would be my business motive, it would be trading, and I will have to pay income tax. So that's what it says. The longer the ownership is, then more likely it will be not a business activity. The shorter the ownership of the asset is, then more likely it will be a business motive. And indeed says supplementary work and marketing. Now when I was selling this iPad, do I have to do some marketing on that? If I'm doing some marketing, then it is an indication of business. And if I am not doing it, then it is just a capital asset. And after that it says profit motive. If there is a profit motive in anything, then it is a strong indication of business, strong indication of trading activity. And if I'm doing it for profit, then I will have to pay income tax. And after that it says the way in which the asset sold was acquired. Now how did I acquire the asset? Now if this iPad was inherited to me by my granddad, then it is obviously I will have to pay capital gains tax on that. And if I bought this one, then I might have to be considered as income tax. I might have to pay income tax, but it is not necessary. But but you know how you buy the asset, will determine and could determine that whether you have to pay capital gains tax on this, or whether you have to pay income tax on this one. All right. Now that is end of our capital gains tax section, and that is end of capital gains tax. We have we have actually finished 2 sections of our ACCA P6 taxation. One is income tax, which was a huge topic, and the second was capital gains tax. We have just finished today. Now, as far as capital gains tax is concerned, it is also very, very important as far as exam is concerned. Now, the exam questions mostly are not set on a single part of the paper, single part of the syllabus. Say, for example, in earlier exam, in basic level taxation, if you talk about fundamental levels, F6, what the examiner used to do was that he will give you a single question and he will ask you to do capital gains tax on single question. Whereas in this paper, which is advanced paper, he will not give you a single requirement to ask you just capital gains tax. So he will give you a single scenario, and after that scenario he will give you lots of requirements in which he will be asking you to calculate capital gains tax and inheritance tax, and he might ask you to do some income tax as well, and he might give you some overseas aspect of the taxation as well. He might ask you to consider if someone is resident in the UK and he needs some ties and blah blah blah. Alright, so he will give you one single scenario and he will be asking you to do lots and lots of stuff. So he'll be mixing each and everything, and that is a very confusing part. That's what the students think that is very difficult. The most difficult thing the students face in the exam hall is to understand the requirement. What is the examiner asking? The most difficult thing which I have seen students struggling, because the students don't understand the requirement, and that will lead the student to waste the time. And if you waste the time, obviously you are not able to finish the question on time, and eventually the student fail. So to tackle with this problem, what you have to do is you have to do more and more practice in the exam pressure time. And so the more practice you do, the more requirements you understand, the more requirements you see on the practice and revision kit, the more familiar you become with the exam style. Because eventually, if you talk about, examiner is a single person. Now, a few years ago, there was a report in one of the magazines where it was said that ACCA will no longer publish examiner names. Now, although I know the examiner name, what the examiner was, but I cannot say it, I cannot communicate it because of some restrictions. So what I mean to say is that examiner is eventually one person who is setting the exam paper every time. So he's just a single person, so the style of the examining the paper will be exactly the same. So that is a benefit. So the more questions you see, the more familiar you will become with the exam style, and the more familiar you will become with the style of the question, with the style of the examiner, and that would benefit you in the real exam. Alright, now I will tell you the questions which are relevant for capital gains tax. If you could please note down, I'm just going to tell you a list of questions which you should do after this lecture. If you finish this lecture, please do these questions. Now please note down question 4 of the BPP exam kit, question 4 part C, please. Question 4 part C, question 7 part B. Then it says question 13 part A, question 13 part A, then question 17 part A2, and the last one is question 19B part 1. Question 19B part 1. So 19B1. And the last question is about enterprise investment relief in capital gains tax. Alright? Now these were 4 questions, I think. 1, 2, 3, 4, 5 questions. Now, please make sure you do these questions. These are only relevant to capital gains tax. I didn't tell you the whole questions. I just told you the small portions of each question which are relevant to capital gains tax. So please make sure after finishing this lecture, do these questions so that it will make you familiar with the capital gains tax questions. All right. Apart from that, the notes, or if you look at your notes, I'm not sharing the screen with you, but if you just look at your notes, now we've just finished the capital gains tax. Now from page 54 of the lecture notes to page 54 to page 58, I think. Sorry, yeah, it's page 54 to 58. This is a self-assessment portion, so you will have to just go through it. You just study yourself. In the next lecture, I will go through with you. Please make sure you study it yourself. Because if you do not study, then you won't understand, because I won't tell you in detail, I won't study in detail, I'll just tell you the bits and pieces of that. So please make sure you study after finishing this lecture and before watching the next lecture. Also, at end of this portion, on page 60 or 59, there are a few questions. Now these are almost the same questions which we have done in the previous lecture. So if you are worrying about it, you do not have to worry. And even if they are a little bit different, then the answers are given in the notes anyway. So please make sure you do them questions as well. All right. And the questions which I told you earlier, which are 5 questions, them are real exam papers. Them are real exam paper questions. So please make sure you do them as well. All right. That's it for now, and I will see you in the next lecture. Thank you and goodbye.